Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Lao Pala, which I believe is a hidden gem and has done really well between 2013 to 17 but is now trading at very attractive valuations. So let's understand what about the company and let's understand what you need to do in the stock. Let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Now about Laopala, it was established in 1987 and they provide crockery and glass products. And these crockery products are extremely famous in the middle income group people across India. And these are very good and prevalent gift items in marriages and other functions that people give Laopala dinner sets, etc. So, a very prominent name in the crockery segment. Top management and a strong pedigree of the stock is always there, and they have a very good market share in this segment. So they have around 70 to 80% market share in the crockery business, and the market cap currently of the stock is around 2200 crores. If you look at the financials, in September FY20 versus FY19, we have seen a dip in sales of around 5%, but there have been a PAT increase. So this is not a dip, but a PAT increase of around 15% that we have seen. Other expenses have increased over time, and that's why the PAT growth has not been that great. Although return on equity was at 13.7%, and the best part about the company has been the operating profit margin. The operating profit margin has grown by around 41% compared to last year, and that is absolutely tremendous and magnificent. So that really means that operationally the company is doing exceptionally well. So if you look at the stock performance, the stock is down around 45% in the last 2 years. The numbers have remained subdued, so it has not been great years for Laopala as with other consumption or niche consumption companies because of the slowdown in the economy. These are the companies that are being mostly hit big time. The return ratios are pretty decent, although the net profit margin is not very great, but the operating profit margin, as you've seen, is around 40%. The last quarter results have been bad because of lower sales, and we have seen what has happened with the numbers and the economy at the moment, which has virtually stalled. The dividend payout is good. That means the company really cares about the investors and pays out dividend regularly, and there has been a stability for the stock. It is not that it is a very errant stock or a volatile stock that you are investing in. There are strong hands into the company, and the promoter holding is strong as well, high as well. So why a buyer on declines? It is still a market leader in its space. So, and as I explained with earlier presentations about stocks which are very good or are market leaders, what they do is in difficult times or when the markets are very tough or the economy is very tough, these market leaders gain more share because they are able to sell the products, or they are forced to sell the products at a lower price. So you're getting a discount on the, you can say, the market leader of that industry. Then you'll go ahead and buy that product rather than buying a second niche or a third level or third tier stock. So that's why I believe that market leadership will even get stronger for Laopala. It is a very big consumption play for the middle income group and will continue to be because of its brand resonance and because of the kind of branding that the company has and the kind of memorable power people have about this product, that whenever somebody wants to buy a dinner set or a set of plates, etc., for crockery, for home, for different functions, they'll go for Laopala sets. Will outperform once the economy recovers. So all these niche segments will really do well, and we have seen that happening in the mid and small cap section because people are having that perspective or perception that the economy will recover in the next 2 to 3 quarters, and the buying has started. So once the economy has recovered, the stock would be at all-time high. So it's better that we continue to invest at this moment. We have to preempt the move. This is a niche segment leader having virtual monopoly. So very few companies that if I ask you into dinner sets or segments of glasswares, etc., which are relevant or direct competitors. So there are a couple of companies that come to my mind. I cannot name them here, but that's just about it. So it's like a duopoly or a triopoly in this segment, and Laupala has the major share of those companies, and that's why I believe that this company would do well once the you can say the cycle of the business or the business cycle turns around. There is no debt on the company, and the valuation is pretty attractive at 20-22 times forward earnings. This is not expensive. At one point of time, I still remember in 2015 or so, 15-16, this was trading at 45-50 times or even 50-55 times earnings, and people were buying into it. So the valuations has halved from those levels. Yes, the numbers have not been great, but you need to understand that the company has its pedigree and leadership intact. And so once the economic cycle recovers, the business cycle recovers, this will really do well. If you look at the technicals of the company, there is strong support for the stock at around the 175 levels, which is the 200 EMA DMA level around 175, 173. Very strong support. The stock is currently trading at around 187, 188. The short term support is around 180. So, probably if you're buying at these levels, keep a stop at 175, and even I'm sorry, even you can trade into the stock, but I suggest investing into the stock. So buy at around 187, 188, and on any declines you buy more. Buy only 10-15% of your total holding that you want to buy, and keep on adding over the next year or so, and then you'll see the magic over the next 5-6 years. The stock is currently breaking out, so that 175 was virtually a resistance and now has become a very major support, and now it is breaking out. And once 220 levels are taken out, then we'll see a big move into the stock. So 220 is a strong resistance for the stock, and one that is taken out probably because of the numbers or because of any other event or because the mid and small cap micro cap go up. And then after 220 we could see a big 20-30% move in Laopala. Long term players can have a stop loss at 160. 160 is a very big support, strong support around 160, 158 levels. So what needs to be done? I believe you can buy on major declines. You can buy at these levels as well, but on declines of say 7 to 10%, it is a must buy around those levels. Keep track of numbers. Numbers should improve going forward. Not quite in the next quarter, but from the holy quarter numbers may improve further. Have a 6-7 year time frame at least, and you'll see the magic that your targets or this could become 2x 3x before 6-7 years. And so it can be a multi-bagger, and that's why I'm suggesting this. At the moment I don't have any investment in the stock, and have less than 5% of the total portfolio exposure into the stock. Keep that in mind. So this was my video on Laopala. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it, and kindly help and support me on Patreon so that I can make these videos even more interesting for you. Thanks a lot for watching.